All right, so here's a stock that it's a penny stock, and I normally don't trade penny stocks, but it is one that I have held since last year. At one point, I had about 500 or 600 shares, um, and then I only have these 200 that I've had since the beginning of the year. I got into this stock because the premiums were high on the selling options, and I figured it wasn't as risky as your typical. Not that it's not as risky, but uh, I thought it was potential for it to go up in price, and even if it never held a nice spike up, it would at least spike up and give me the opportunity to get out. Thought there was a good chance of that, so I started selling the options on it, and it, you know, did pretty well. So uh, all in all, when you add up all the premium I've collected and whatever money I may have made on selling some of the shares off on the spike beginning of this year, where I sold the majority of the shares I had. The cost basis for these remaining 200 shares that I currently have is almost nothing. It's below 10 cents. Last time I checked, it was below 10 cents. It's probably still above zero, probably still positive cost basis, but the majority of this share value is profit. So I don't know if I'm going to hold on to them a whole lot longer. They've had a nice run in this last week. As you can see, it's up about 10% in the last week. So I do have a current call. I got to wait for that to expire because I'm not going to buy that to close it out. And I probably will keep selling calls though. And I know a lot of people complain that the premium is not high dollar wise on these, but percentage wise, it's actually a good amount. You know, even if the premium is just a couple bucks, that's still more than 2% because the shares themselves are worth less than $1. So it's still a pretty decent return on a month. You know, because these are monthly. Oh no, actually these are weekly. They do have weekly options, but say you do get $2 over a 30-day option, you know, it's still over 2% you're making. Again, it's a little riskier, so it could go down. The shares price could go down, but that is offsets a little bit by that percentage. And again, in my case, it's easy to be more patient when my cost basis is virtually zero. So okay, so now I switch to the option screen here for Sundial, and as you can see, I have two contracts on the 200 shares with a strike price of $1, which it's sitting at 78 cents, so it's most likely not going to get to that by the expiration date of September 17. I'll probably keep selling calls after that, target October or November, depending on the premium, or just sell the shares if they stay up high. Again, it's pretty much all profit, so I could cash out and then redeploy that money into something else. And I just want to add another point here because I did mention that percentage wise the premium is not too bad on these on selling options for this, but somebody might say, well, then why don't you pick up more shares and sell more contracts? uh it's not something I really want to get into and hold for a long time, and take on that additional risk on something that's a penny stock again. So, and the premiums aren't as good as they used to be.